After 3 red weeks on Nasdaq, where Nasdaq fell more than 2.5% last week, the question is, are we heading for a green week? Buy signals are finally getting very low, but are they low enough? You are listening to Trading Tips with Jim a Stock podcast provided by stockinvest.us, and we are heading into week 34. As I warned you last week, I thought it would be a red week, and maybe I will have a different opinion this week. But before getting to the conclusion, let's have a quick look at what will be this week's events. What are the things that can affect the market for the week? And while remembering, thank you for the many nice emails which I have received lately and questions from you users. If you have a question, I will be more than happy to provide a comment. You can post it on the YouTube video or send me an email or try to reach me on Discord or otherwise. As I told you many weeks ago, and you may notice this seems to be a slight pattern of mine. I told you buy signals were way too high, that the markets were way too high, and that we had to have a natural correction. I was, I believe, maybe 1-2 weeks wrong before the markets finally took a dive, and Nasdaq, as I said, been falling for 3 weeks straight. Dow Jones managed a slight green week last week, but was down, the week before last week, but was down 2.2% last week, and it seemed like more or less every stocks were being hammered over the week. Different news coming out last week caused the reaction downwards, fueled by speculations of less growth in China and a few other things. And I really hope that many of you caught up on what I told you about EV. Many months ago I told you now EV was the time to buy when NIO was at 7, and when NIO was about 15 I told you that it will have a natural reaction back. My guess was that NIO would turn around 12. NIO currently being under 12, but I purchased more stocks around 12, and hopefully I will be correct that we will have a rebounds up soon. We will see what will happen. Otherwise, of course, war is still doing good. Gold has not been doing as good. Has a little to do with the fluctuations in the gold price, the fluctuations in dollar price against other currencies as well. But gold was down $24 last week to 1,918. We'll get back to that as well. Usually I want to provide you with some long lines, then head into the short lines, wrapped up with a conclusion, and then we move at the end over to trading tips and a little other information. About the long lines, we will not dive too much into them. You just have to listen to my podcast, because I feel sometimes I repeat myself. But as I said, I thought there would be a conflict with China within the first half year of 2023. Still hasn't happened, but I'm a firm believer that the next conflict will be with China over Taiwan. We will see more aggression around Taiwan. That conflict is not so much up in media. What is more up in media is the hardening relation between United States and China. And I think it was maybe this weekend where Biden again was saying things about China, which China didn't take very light on. We had issues regarding semiconductors. There's been a lot of issues, so the relationship towards China is really going bad south, as we say. On top of this, we have the BRICS countries grouping together. They will have a summit in Africa. More African countries are joining BRICS or supporting Russia and China. It's really an issue which may cause big fluctuations on the dollars. I worry about this a long time, has to be in over the last 2 years at least, how these things would play out, how the sanctions against Russia, how the war in Ukraine would play out. And I predicted that war, and as I said, I predicted the upcoming war with Taiwan. Hopefully there will be no such thing. And we are already past first half year of 2023, so I'm already wrong on the timing. Still, I believe that will come up, and sadly we have a lot of other bad economic news pushing, like the less growth in China. Inflation is not going anywhere soon, and some of this will affect the market in general, and especially inflation will affect the market. We know that markets anticipate the prices long before it happens, is calculated into the price. So having a slight recession is already included into the prices. The stock market is usually years ahead of the rest of the economy. But one thing which is not properly priced into the market is inflation. On Friday, Fed will give more insights into what they think. You heard me when everyone says that there will be no interest rate hikes. I told you they would go high, and they would go much higher than any expert would say. And when they said that now it reached top, I say it will just be temporary, it will continue upwards. And I think that you will see Fed already signal that that is a likely choice, but I think that you will see more wording towards this, because inflation will not go anyway anytime soon. It will remain sticky, and we will not dive too much into the reasons, but one reason is increasing energy prices. You should notice this when you fuel your tank. Oil is up at $82, been quite steady there. But I believe it will continue to push upwards, and that is one of the main factors pushing prices up. On top of this, we have the Ukraine conflict, we have wheat issues and a lot of things from Ukraine causing food prices to still remain high, and then there is the conflict between China and America causing disruption in the flow of goods from China to America. The countries around Europe is getting more nationalistic, trying their own homegrown production, which was indeed natural. It had to happen because we saw how COVID played out with logistics, but homemade is often more expensive than the cheap goods that we have been purchasing from China, making China the greatest military force in the world. Some would argue, say that I'm wrong, US is still number one, but you will start to see a lot of articles popping up that may not longer be the case. And pair this with a possible slowdown in the Chinese economy may brew for more military-related conflicts. Hopefully nothing of this will play out, but I remain firm when I say that I still believe there is more upside in war, gold and oil. So this is like the main mantra which I've been pushing over and over again. We played the AI, of course, when that was running hot. And I warned you, I think that must be some 4 or 5 podcasts ago, that maybe it was time to take a little profit in AI, that it would have a natural reaction back. All of this is total natural. Now you will start to see which one of the AI players that actually making money. Nvidia will have quarter results this week. All the eyes will be on Nvidia. How will they perform? What will the future outlook be? What will the statements from the CEO be in regards to Nvidia? So I think that the AI focus is now slowly going to shift over to who can actually make money on AI, not create just a fancy website or some fancy AI tool, but actually be able to make money. We know that everyone creating graphic cards, anyone creating cloud services, they are already cashing in because everyone is paying for their services. We know that the AI competition is growing, which means that companies that ChatGPT, for example, is facing a lot of competition. And that usually means that they have to lower the prices and there is less top profit margins. But in all of this, there will still be those who will rise to the stars. So there is much more money to be made in AI, but I think that you have to be much more selective into what you will buy. So there are a little inconsistent, but some of the long lines, I think that we are brewing up for a China conflict. These things can set a scare of the market. In general, I read a few articles last week that finally the spendings are drying up. people's savings are getting into the last month, was written somewhere. That during COVID time, people saved up a lot of money. There was a lot of governmental support. Lately, we had all the inflation, all the price increases, and salary increases causing less profit margin. But the bottom line is that the consumer been losing money. And if you're interested in small facts, I read yesterday actually on the way back from Poland. We'll get back to that by the end of the podcast. Looking for Napoleon treasures, doing metal seeking, but on the way back for a 10-hour drive, I had the time to sit and read the news as a passenger. I read a lot of news, and one of the news I read was from Norway, where it said that over the last 3 years, a common family in Norway had lost $16,000 worth of buying power because of the huge inflation increase in food prices, especially along with all other costs. This is taking a toll on people's saving. It's just a certain amount of saving on the account. And it was an article in US, I don't remember it was Barrows or Money or where it was. I read it, but it was stipulated that the consumer only have 1 month left of spending, and that can cause a really huge sudden stop into certain purchases. Maybe that you will spend less on pizza. It may be that you will go less to restaurants. So it will be interesting to see how this will play out in the stock market, but I'm not sure. I would put my bet into consumer spendings, like for instance cruise lines. If you go 2-3 years back, when COVID was at its worst, and this Norwegian cruise line, the Royal Caribbean cruise line, was hammered on, I told you this is the time to buy for whatever you can, because this will go up. And even below, we had oil stocks the same. Now I think that game is over. I believe they will struggle as consumer spendings will go down, and everything related to consumer spendings will go down. Some of the companies like Walmart and all of these are issuing a warning about the same tendency. So it'll be a tougher game in the stock market where to put your bets. I will repeat the last time. I think that the safe bet will be in oil, gold and water. The rest you have to be more selective, and you may sit and wonder, so what could be good stocks to buy in oil? I tried to answer this to a Discord user last night, what I think and how I think. So let's spend 1 minute for that. Let's assume that you want into war stocks. So we have General Electric, for example, who is making shitload of money on war. Other than that, you can try to figure out what are the different countries purchasing, because every country around Europe is now increasing their defense budgets. They are changing their weaponry, they are sending the old stuff to Ukraine and then buying in new stuff. So you have to do a little due diligence yourself. Dig down, figure out what is the main thing. Is it Stingers they are buying? Is it other type of rocket launchers? Is it tanks? What are the main things that they are building up in their armies? And it may be something as simple as standard uniform and soldier equipment, and you just have to look for which company do this. Check out their graph, check a little bit about their financial, and you might find a stock that can go extremely high over the next few years. And more than that, most of the bigger companies, they will keep paying solid dividends. Yes, they may have a dip if the stock markets continue down. They may continue down, but many of these stocks pay 4-12% dividend easily during a year. Even if it's Chevron, a big company like Chevron, walks a little up and down, but keeps steady. And it might save you for some headache if stock market will continue downwards. About these, I feel I've been talking so much over all these years, 4 years of podcasting to you, trying to give you my best tips. But maybe you remember I told you about Hamas suits when the Ebola breakout was. I think that was in the early podcast, and how you could do into companies producing the Hama suits, and we made money on that as well. So there are things you just have to dig deep down. Try to be more solid in your stock picking. That were long lines. What about the short lines? I already mentioned some of it. Powell will speak on Friday. There will be some consumer spending numbers, I believe, during the week. There will be some quarter results, nothing really big. I think Nvidia is the biggest of them all. But nothing, I think, that can change the market. So what can affect the market this week? What is a fact is that Nasdaq been falling for 3 weeks straight. From being up at 14,500, I think it was, it's now down at 13,290 and may very well break below 12,000. To determine what will be, there is usually two things which I like to watch at. I like to watch at how is the buy and sell signals doing, because they will give you an idea about the general health of the market. The other thing is I love to combine this with the charts. So let's first very quickly look at the signal numbers. Last week I told you it was 31% buy signals, been falling for 4 weeks. It was up at 37 in week 30, to 35, to 31, now to 22% buy signals. It's starting to get really low, but you have to know the following. When we are this low on buy signals, two things can happen. It can bounce up, or it can fall really fast. It's the same thing when it's overbought. When it was on 40, I told you it is way too high. But here it can go even faster up, and it did. It pushed on weeks and weeks for 40 plus. But we are at a level where things are starting to get much more interesting again. So we just have to look at different charts. Look at the Nasdaq chart, look at the stocks that we are actually wanting to purchase, or we have to try figure out if it's a natural bounce up. Does the trend line support, are the price close to the trend lines? Are the support from accumulated volume? Is the volume changing a little bit? We use all these techniques that we know, and which you will find most of them easy explained and easy visualized at stockinvest.us. Going to Nasdaq, down from 27 to only 19% buy signals. I think the one time that I told you that now is the best, we were down at 14. I told you this is just heaven. It will be so huge upturns for some stocks. 19 is the same level like 22. Things can continue to drop downwards or go upwards. We are at a level where people are scared. And when people are scared, you can get these mass dumping, and one dump will cause the other dump because people are sitting in leverage positions. And when the leverage is broken, they are forced to sell, or the system will sell by themselves. So it gets a little self-inflicting and self-predicting further down. New York Stock Exchange, 23% buy signals, down from 35% buy signals, and London is down at 12. I would say that London is the most likely weak winner. I think there should be many nice opportunities at London Stock Exchange as we speak. Tokyo 25 and Shenzhen China down at 13. Shenzhen being and China being hammered over some worrisome economic data, but you will see how China will play out these things. In general, the buy signals are now way lower, and that may give room for an upturn. Upturn should come, but as you know, when things were way too high, I told you that you would have a reaction down, and it took like 1 or 2 weeks before it actually happened. I may be very wrong when I say that from the buy signals there is a big chance that things will go up. Now let's have a quick look at the chart, and if you are watching the video on YouTube, you will see the chart as well, and I want you to notice two things. First off is the trend. We can see that we are at the bottom of the trend. More important is the extreme low relative strength index for the Nasdaq chart, down at 16. When being this low, it always presents the buying opportunity. It may not be the biggest, but stocks being hammered at much in general will give a rebound. Worse off is that there is a super sell signals from death cross, marked as a red star. Is not in this chart. is not my Death Star, but it's a cross from when the moving averages long and short crosses each other. You get a huge strong sell signals. You have the opposite when they do for a buy signal. This indicates that it will be tougher moving forward. The market fell more actually than I thought. I thought the correction would be somewhat natural, maybe turning around 13,600 and then pushing up, causing some fake signals. But the long term here is now starting to be a little more worrisome. But we should have a reaction up. Hopefully it will start this week. I see two things might happen. Either we get off to a little frantic selling, bringing the market down to, could pop under 13,000 on intraday, but maybe stop around 13,000 on day, giving good short-term buying opportunity. Or we start to pick up early in the week, and we may push upward to 14,000. I say that is very realistic. I think there is a lot of good buying opportunities. You just have to be a little selective. But the chart and the buy signals say the same thing. There is a bigger chance that we're heading for a green week than we're heading for a red week, but only the market will tell. And being in this situation, things can escalate very, very bad downwards. How this will play out in the long term, we will have to check, because the chart is still positive, but now because of the long fall, we will have to see if we are able to break above 14,000, or if we will have a slighter correction moving sideways between, I would say, 11 and 13,000 points for some time. Short term, very, very short term, speaking the week ahead of us, it's more likely that we will have an upturn than a downturn, and I think that you will see a huge rebounds in selected stocks. Hopefully I'm not wrong. Hopefully it will happen this week, that you don't have to wait for next week. But in general, I think, as I said, the situation is good. We will just run to a few more numbers before we will wrap it up with the $1,000 challenge. And regarding the challenge, I have to admit instantly, I promised you that I would sell on Friday, but I also mentioned in the podcast that I was invited to go to Poland, to Legnica, be so lucky to go on the fields where Napoleon had camped together with archaeologists for some metal detecting. I found a few nice things. Some of them will hit the museum, and the other guys found more than I did. But in the rush and the late evenings, because the Polish metal detectors, they had something called Integracja every evening, and that Integracja was, in short words, beer and sausages. And that caused me to forget on Friday to sell Intercept as promised. I still sit with Intercept, but it will be sold today, and I will tell you which stock that will get in next. So, rounding up the last few numbers, oil, $82. I think oil will continue upwards, may move a little bit sideways, a little up and down, depending on which major news come in. But in general, I think oil will continue upwards, and that makes oil stocks interesting. Gold, $1,918, and the 10-year Treasury yield, one number that I told you to keep an eye on. If it moves up, markets goes down, and it was keep moving up for the last 3 weeks. Currently sitting at 425, and sadly, I think that it will continue upwards. Not this week. This week it might actually retract a little back. But when Powell starts to speak and when we get more economic numbers, I think that the 10-year Treasury yield will just continue a little bit more up. And that brings us to the final phase, where we will wrap it all up with $1,000 challenge and some last commentaries. For the $1,000 challenge, some weeks ago, resetting the portfolio, we had that successful trading portfolio for several years which we followed. I reset to the $1,000 challenge, where I will try to grow $1,000 as fast as I can and as much as I can by only trading on one time per week. So you can follow in the podcast. So far, it's been close to a disaster. We went into Intercept. I told you it was not the correct time to go in that week, but I wanted to get started I got in at 11.24. The stock was a few times above that, but never managed to kick off. Was hit by the red market. And quickly wrap up, what is the $1,000 challenge? In order to do this, I told you we will take extreme risk. We stand to lose a lot, but we stand to win a lot. It will not be a safe type of portfolio. I will go very aggressive where I think I can gain a lot, and you will very soon, you saw it with Intercept, was not a good choice. But I'm hunting a certain particular stocks. And I told you that we will go for the oversold, which have a huge increase in volume, signaling a possible bottom. We will do bottom fishing. It's the strategy I used when I first started to trading, and that brought me in to where I am today. So I wanted to redo all of this, and according to some YouTube comments, we decided to set $1,000 into it, and I would post for you the trades, tell you up ahead the trades, show you the actual trades when I've done it, and keep following. So we went into Intercept 11.24. It never managed to move over these 4 weeks, and I promised last week that I would sell it on Friday so we could get into a new stock, being down more than 6%. We was last week from original trade. We had $1,000. Now it was down at 940. And I told you that I was traveling to Poland. Actually, we left very early on Thursday morning, 5 o'clock in the morning. We set off to Poland, and it was a long journey, 10-hour drive all the way down to Legnica, which is close to the border of Germany in the southwest of Poland. There they found a big field. The city, by the way, is close to 100,000 people populated, with around 100,000 people, 92, 93, 94,000 to be more correct, but close to 100. The city was first time mentioned around year 1000, so it's a very old city with a few war histories. And one of the things that happened in the late 80s was that Napoleon came with 25,000 men building up his camp, preparing to take and conquer the world, going towards Russia. Very interesting, as many of you know, I'm sitting in Vilnius in Lithuania as we speak, where the headquarters of Stock Invest is located. And Napoleon, he marched this way through Vilnius. So over these years with metal detecting, I found traces of nice stuff from Napoleon also here. But back to that place in Legnica, there was a huge field, and every year they've been trying to explore together with the archaeologists more of this. So they made it a big event with a major and with people dressed out in Napoleon costume, firing off cannon before we were allowed out on the field. In total, it was some 40 plus of metal detectors, and I belong to the Lithuanian Mink team. And we went out in hot days, some 30 degrees, having a very nice time on the fields. We found buttons from Napoleon, very collectible items. All of this went to the museum, by the way. It worked like this way. We found it in the field, we checked what it was, and if it was just shit, bad stuff, it went into the bag, and if it was something worth of interest, we would mark it, put it in a bag, mark the spot with a flag, and the archaeologist would come and check it out. And sometime if they were close by, you just came and they would show and try to tell you what you found. And some of these buttons, especially with the numbers of the different regiments, is like one super fine. And we found several of them. Actually, I'm very happy about the Mink Club from Lithuania. Performed extremely strongly, finding, I would say, the nicest and the most finds of them all. But these guys are indeed top performers on metal detecting, and I hope I will get up to their level at one day. But I had a good time as well, and I found a few very nice things. I might even post a few pictures on the YouTube version of the video so you can see for yourself. Anyway, there was some speeches, some small lessons from professor talking about different history around, surrounding all of this in the evenings, and the Polish metal detecting club, they had every evening Integrazia. And that Integrazia meant it was free beer, and they made barbecue, which was some delicious sauces served in a regular bread. So that Integrazia lasted from 8-9 in the evening till 12. And that was on the same on Friday, and I was watching early on the morning, trying to find a good selling point for Intercept. I forgot to set the settings, and suddenly when the time, because Poland is 1 hour ahead of Lithuania, so when I wanted to check in the evening, the market was already closed. I'm very sorry to all of you users who didn't follow. That I didn't follow my own rules, but I was to sell Intercept on Friday, and I will sell it no matter what today, and I will post. I cannot post on the YouTube video because you will have the YouTube video up before the markets open. But I will post it as a comment, or for sure next week you can see the actual sell of Intercept. Intercept ending 10.45 last week. It held up while all other stocks fell down. Intercept held up. More or less unchanged week over week. A good day on Friday, up 4%, but still there will be around $70 loss on the first trade. I think the portfolio is currently valued around $930, so that is the amount that I will have to invest into these next stocks. And I found the next stock, again, we will go high risk, and I will tell you exactly why we will go. This one looks much better by the Intercept, by the way. Intercept was a little early. This has much more of the classic things that I wanted. Sadly, we will be utilizing a catastrophe because we will invest into Hawaii Energy, or I will invest into Hawaii Energy. HE is the ticker, HE, Hawaii Energy, and they had a brutal fall from some $40 all the way down to just above 12.03 because of the wildfires. Sold on extremely high volume, bouncing up from 12.03. That is the type of candidates I really want to trade into. No resistance above current level. There is some around 15, then around 23, and up to 33. I think there is a huge chance to make some good gains in this. I would not be surprised if you can do at least 20%, at least get us back to green. But there is no guarantees. Market can turn very south, and this can just continue downwards, and we may stand to lose money. This is a high risk trade. But if you watch the YouTube video, you see the chart, you see what I see. We see a chart that had a huge fall, extremely oversold on the relative strength index. 14 is down at 8. That's as low as you can get it. I think it will bounce up. I love the way the volume, we call it a sell-off, we call it a dead cat bounce. Has sad stories from the 1929. Wall Street crack, when people were jumping off windows, gave the name to the dead cat bounce, because they jumped out of the window and just shortly after the markets popped up on a natural reaction upward. Sad story for a sad description, but it is what it is. It is a sell-off. There was tons and tons of stocks being sold off, and I think it opens up for a trading opportunity. So I will do the following. I will sell Intercept on the opening. Probably stand to lose. Check the pre-trade now. So it was 10.45 on Friday, and the pre-trade, as far as I could see, was around 10.20. So I stand to lose a little bit more. And I will try to go into Hawaii Energy HE as fast as I can. I will, even if the stock is up some 5-10% in the opening, I will still get in because I think there is more upside. Hopefully we are lucky. This was what I started my trading doing. Had such a huge success with it, but as you know, the first trade went south. I'm sorry about that, but I will only be judged by my real actions. I was doing good on the trading tips portfolio, but so far in the $1,000 championships, I have let you down. We are sitting at some $930, and now hopefully we can bring it back on our journey to make as much money as fast as we can, but trading only one time per week. Maybe I will change that concept because I really want to do this when it's hard to find just on the Monday, but the podcast is every Monday. Maybe we'll figure out the solution in the future. There you have it. That was my week. I had a nice week last week. It was busy work days. Then I went to Poland on a long trip and had some amazing days doing metal detecting. Enjoyed every bit of it. The stock market was not that lucky. Some of my stocks got a bit hammered last week in general because I have much more stocks than what you see. Overall, I was held up by oil in general, and some war stocks held up, creating not the biggest losses. Had to take a small loss in the last investment in NIO. As I told you, I have NIO. I sold around 15, rebought at 12, but it popped down below 11 if I'm not mistaken on Friday. Didn't follow too much, and it may just continue downwards. It's a hard game, EV, but we will see how things will play out. I hope you enjoyed the podcast. I hope you will leave a comment. Feel free to ask me any questions, and hopefully when I get back next week, I will be able to tell you not the same thing I've been telling you about Intercept for the last 4 weeks that we are just down, but that I finally did a good trade and we will get back on track. More than that, most important of all, I hope you will have a super week. I hope you will enjoy your time, whatever you are doing, wherever you are working, wherever you are listening to this podcast. I really hope you will have a super week, and I hope that your portfolio will be more green when we speak next week. Until then, have the best of a week. Bye.